So in other news, we saw that the NSE received regulatory approval to roll out day trading.
Yeah.
So yeah, basically they received approval from the Capital Markets Authority to initiate day trading, and it intends to start on 22nd November 2021. And this is part of NSE's strategy to enhance market liquidity.
Yes.
Yeah. So essentially, day trading basically is when you buy and sell securities or a single security multiple times in one day. So you can buy it, sell, buy, sell, and pretty much try to take advantage of intraday price movements in the market.
Yeah.
So what so in a bid to what's it called? In a bid to like encourage people to trade more and do more day trading, they've given a discount.
Is it they're currently at 0.11 something?
It's usually it's 0.12.
Yeah.
So they've essentially given a 5% discount. So the new charge is going to be 5% discount on 0.12.
So okay.
The new rate is 0.114, which will only be levied on the second transaction. So if you did the first time, it will be on 0.12. Then the second one 0.114. And so this has led people to be like, okay, so what's the point? What's the point? 5% is insignificant. It's not going to encourage anyone to do a 5% drop of the charge is not going to encourage anyone to do day trading. Because you're going to incur more cost than probably what you're going to get as returns in price movement in a day. That's the you're the one who usually trades more compared to me. So you can tell like what are the costs that you usually have to incur whenever you have to make a sell.
Okay. So now the advantage for me does not lie in the discount as much as it does on the fact that actually this is a product that you now have. I'm so proud of the NSE for having grown to such levels because it shows maturity of this market. Because now, again, they say that it's for liquidity. But then could you look at the other implications that this is going to have in the market? We've always had like, what are the ratios? Is it 70%? What's the figure? I think it's 70% of those who trade in the NSE are institutional investors, and most of them are not even local investors.
Yeah,
I think they're foreign investors.
Good
foreign institutional investors. Now the what's left now, the 30% is distributed among Kenyan retail investors and Kenyan institutional investors. You get a feel of how small a piece of the pie the Kenyan retail investors have. So when they introduce such things like day trading, it's really to increase the retail investor participation and numbers on the NSE. And then now let's talk about the costs now. So you place a trade, you want to buy a stock that's going for 40 shillings. Talking about Safaricom is currently at 42. Buy Safaricom, let's say it's going at 40 shillings. The minimum amount of shares you can buy in the NSE is 100. So we're talking about 40 by 100 shares. That's 4,000 Kenyan shillings. Now the other costs associated with that trade, for placing that trade, there is the what do you call it? The commission charged by your broker, brokerage fees. Then now there's such other additional costs like what the NSE is charging now. Because it's only until recently that I realized that some of the revenue streams that the NSE has. The charges on the transaction charges whenever you're making a trade or entering a position or exiting a position. Initially, I thought it was you and your broker, then you're done. And now there are those. So if you, those brokerage fees, they influence the cost, the ultimate cost the price that you're going to pay for this particular stock acquisition. So when the NSE decides that instead of charging you a commission of 0.12% of your trade, you're going to reduce it to 0. And now it is insignificant.
Yeah, it's very insignificant.
Well, unless now we start talking about scale here. Unless you're a huge trader, you're dealing in shares in the thousands, you won't feel any implication. You won't feel any sort of any reduction or relief.
Yeah,
it will be insignificant, as you're saying.
Yeah, and also you're getting charged like this every time you're making a trade. Like you're getting charged like this percentage of
commission.
Yeah.
So at the end of the day, if you're not keen, you might end up losing money.
Yeah. So like it has to be a stock that gains like considerable. There needs to be a considerable change in price per day for it to make sense. For you to be able to like enter a position twice in a day or multiple times in one day.
Well, you see, there are a lot of trading mechanisms or ways to trade or methods to trade on a stock market. One of them is what you're talking about now. It's called day trading or scalping in some quotas.
Yeah.
So in mature markets, in like the New York Stock Exchange, it's been happening for so long.
Yeah.
They've had to day trading for so long.
Yeah.
And if you go to YouTube, you can even see people who, it's largely speculative. Again, if you look at the demographics of those who engage in it, it's not the institutional investors, it's the kawaida people.
Yeah, and that's even, we saw that a lot last year, especially with COVID, and now when there were stimulus checks and then the recovery efforts done by the Fed, like it was very random people just making money.
Yes.
And people claiming to be better investors than Warren Buffett because they have made crazy returns last year.
Yeah.
And especially when March came, so when the pandemic hit, the US market like dropped like significantly. Of course it was bound for recovery. Then you have a lot of free money and markets.
What you just talked about now.
And then now guys were having TikTok accounts
flashing money,
claiming how they're brilliant investors because whatever stock, like the whole market was going up, so whatever stock you picked, most likely
you'd gain.
It was going up. So but like I think for the US it's because costs are very low. There's barely
best commissions are you see they have players like Robinhood, where they literally charge no commissions for I don't know how many, the first number of trades, the first X number of trades. I think it's 100 number of trades, plus they give you bonus stocks and all that. So there's a lot of incentive for one to trade in the stock market in the abroad. Okay, in Kenya that's where we're headed, and that's why I was so happy about this market maturing, our boss maturing. But again, to go back to our point, most of the people who engage in day trading are people who do not conduct fundamental analysis. These are just people who speculate. They're like, they buy on emotions. I'm going to buy because I believe this thing is going, because it's the hot thing. Just like we talked about Tesla.
I don't know whether you can say that they are not they don't do I think for most day traders, just taking advantage of momentum during the day, whatever volatilities are there during the day, which is quite technical for you to be successful. So I don't think it's just a random person it's not an unsophisticated trader who executes day trading properly.
Can I give you the statistics? Or in the stock market, 80%, over 80% of the traders lose. It's only less than 20% who gain. Understand? So yes, there are those who do the math and all those fundamental analyses, and they know they trade on news and all that. But I mean, there's a whole thing called buying and selling of what? Of ideas or signals in the NSE. Not NSE, sorry, the NYSE.
Yeah, or generally in any stock market.
Exactly.
Stock market.
So there's a very significant chunk of or element of speculation that goes into placing of these trades. By these people tend to be young people and all that. Because I don't know, I'm yet to hear of an institutional investor, like an investment bank, for example, which does day trading.
You know, there are many firms whose bread and butter is like day trading, taking advantage of.
Is that like shorting?
It's not necessarily shorting, because it could be you could either be buying a position or selling. So shorting essentially is
you're
selling.
borrowing.
Short selling is when you borrow to
sell later.
Yeah, you borrow and sell now, then you buy later to cover your position. So
yeah.
Essentially, so I borrow a share at 5 bob.
Yes.
So because I'm seeing maybe the price is going to go down. So I borrow from you.
Yes.
A share.
Assuming I'm stupid enough to sell you, but anyway.
No, for you, you're not selling me the share. You're just lending me the share.
Okay.
Yeah. So when you need it, you're going to
ask me. You to sell and give me back my share.
No, you don't care. You don't know what I did with the share. You're just going to ask me for your share back. I'm going to give you your share back. So even in the books,
at the price then.
No, you just have your share. How you get it to me
at the price then. Okay, look at it this way. I have 100. Let's talk about Safaricom. I have 100 shares of Safaricom going for 40 shillings. Then you come to me when they're trading at 40 shillings. Then you borrow them. I lend them to you at 40 shillings. Well, they're going for 40 shillings. At the back of my mind, there's nothing to do with the 40 shillings. I've lent 100 shares.
Yes.
And so that's what I'll expect from you.
Yeah, you'll expect 100 shares.
Borrow them from me, expecting that they would go down to let's say even 35. So when they go down to 35, you bought them at 40, you sold them, then they went down to 35. You'll reacquire them at 35 shillings. Then give me back my 100 shares. You've made the differential, which is 5 shillings. 5
shillings per share for 100 shares. So I've made my 500.
That's where we are headed, right? With the introduction of day trading. Or don't you think it would have happened anyway? The people did it anyway.
I think there needs to be regulation that allows people to trade on shares that are not theirs.
Why?
Because I'm trading on shares that are borrowed.
But it's a willing buyer, willing seller thing. Why do you?
No, it's like
regulation.
No, essentially, it's like you need regulation to allow it. Basically, it's you coming to crash at my place for one day, and then because I believe property prices are going to go down, I now put it in the market and sell. You sell my nyumba.
That example. Okay.
Yeah, so I think there needs to be regulation that actually allows short selling. And people, because essentially it's not my shares. So if I borrow 100 shares from you, those are not my shares. Like they're registered to you, and so to be able to sell those shares and the mechanism. So I think there's still time before we get there. Yeah.
Well, I had a question. I was looking at the whole short selling thing. What's the incentive for investment? Because it's investment banks who lend these shares to short sellers, institutional and retail short sellers. What's the incentive? In as much as, because the short seller is speculating that the price will go down, so the only hope the investment bank would have in that scenario is that this short seller is wrong and that the price, instead of going down, would go up.
Yeah, I think it could be. Yeah, it could be different outlooks on the stock, and this is also why the stock market is so wild. Because it's very hard to tame the market. It's a beast that cannot be tamed because of different expectations and different outlooks that every single player has. On one stock you find it's split, like we've just seen the Tesla example, where it's 48% saying sell, another 26% saying hold, another 26 saying buy. So it's always, and it's the same stock. People see different things.
And these are reputable people.
These are reputable people.
So you can't disqualify anyone on face value.
So I guess I've never actually thought about it. I've never thought about what's the incentive for me to lend you my shares. But I think what you say makes sense. It could be, for me, I believe, these shares are not going to go down
as this guy thinks.
Or maybe you still want to enjoy the dividends from those shares if the company probably does good dividends. I think there could be multiple plays or multiple things for you to hold on to a stock. It could be part of your core portfolio strategy. So I think there's a myriad of reasons. Why?
When you lend a stock, would you still have it on your?
Yes, it's yours. See, that's why you've lent it, so the asset still remains with you.
Be an asset. Cool. That's it about NSE. And
but then that's the interesting thing, because if I short sell, you've lent me the shares, and I go and sell it to someone, let's say if Keegan are here,
Yeah.
I sell them to Keegan.
Yes.
So see, these stocks, it's now registered to Keegan. So I think there's a whole mechanism as to how exactly
It should work.
that works. Yeah, which
Now I get why regulation is required for that. Understand you.
yeah.
Yeah. In other news, I guess.
Wait.
That's about it.
So for this day trading, I think the biggest thing, it's good that it's here.
Yeah.
But they still need to look at the costs, the transaction costs. Yeah.
But you see,
because I don't think in Kenya a stock price is allowed to trade more, to gain more than 10% in a day.
I think it's market supply factors.
Yeah, but I think there's a cap on like 10%.
I'm hearing that for the first time.
I think I had some. I'll need to confirm, but
Yeah.
I think so.
But you see, these are transactional costs. Yeah, it is up to the investor to look at how much it's going to affect the investment, sort of. If it doesn't make sense, don't do it.
Yeah, if it doesn't make sense, don't. But the point is, if you're capped at 10%, let's say rise, then chances of you actually gaining considerably on day trading are very low. Because I think there's a cap. There's a cap.
I will need to find that out. Where would you'll update on our socials? On Twitter? Yeah. But then I get you. If it is true that there is a cap, then really, what's the incentive? Because you're not going to gain any.
It's not like you're going to gain significantly.
Yeah.
In one day trading, and yet you're just making money for the NSE in terms of the costs and the commissions that you're paying.
Yeah.
So yeah, we'll sort that out and see.